Hi friends, good morning. Okay, our chapter of investment accounts is going on and we are doing our accounting for fixed income bearing securities. Yes, the journal entries we had seen day before yesterday. Yesterday we did two questions. Question number 1, question number 2. We did two questions 1 and 2 and we understood few things like 1. Your accrued interest is always calculated how? From the last interest date to the date of purchase or sale. The accrued interest is from last interest date to the date of purchase or sale. Second, your interest is always calculated on nominal value. It's not on your purchase price, it's on the nominal value. Number 3, whenever we sell our investments, we need to find profit or loss. For finding profit loss, I need cost of investments which are sold. Okay, so for finding profit loss, selling price is amount received towards investment. And your cost, how much you paid for investments earlier. Now cost can be either by FIFO method or by weighted average method. FIFO is pretty simpler. If it is weighted average, how do you find the weighted average cost? I told you a formula. Debit side of cost minus credit side of cost divided by debit side nominal value minus credit side nominal value into nominal value of investments sold. The debit side cost minus credit side cost divided by debit side nominal value minus credit side nominal value into nominal value of investments or your debentures which are sold. And this will work every time. The normal method which we are doing, every new purchase comes, weighted average rate changes, it becomes difficult. So better is to follow this method. Okay, we had these two questions done and one question was for your homework. Yes, question number 2 of home assignment was for your homework. Check the homework question. Check the homework question. Again a reminder, your 30% of paper directly will be from home assignment questions. They are all ICAI questions. Please have a habit of doing the home assignment question. Do it on your own. Again a reference of ICAI book just to refer if you are stuck up. Don't copy from ICAI book, otherwise it's of no use. Do it on your own. Compare your solutions with ICAI book. Okay, coming to your question 2 of home assignment, which was for your homework. We have Y Limited issued some debentures. Interest is payable half yearly on 30th September, 31st March. Interest payable 30th September, 31st March, 1st December. Mr. Bull and Bear, okay, Messrs. Bull and Bear, you purchase some debentures at 101 come interest, also you pay a brokerage. And on 1st March you sell off everything. Okay, the 1st December you buy, 1st March you sell off everything, again you pay a brokerage 1%. On purchases, the brokerage will be added, on sale, brokerage will be deducted. And the price given is both come interest. Okay, we go to the solution as per the ICAI book. This is the solution. The solution as per ICAI book. This is the solution. Check it. Okay, first when we purchase, it's to bank. We are purchasing nominal value 10 lakh, towards interest is 20,000 and towards your debenture is 10 lakh 100. Next we are selling. When we sell, bank is credited. When we sell, bank is credited. Nominal value fully sold 10 lakh. Interest accrued is 50,000. And we are selling it at 9,99,400. This is towards debentures. Okay, we got it at 10 lakh 100. We are selling at 9,99,400. There's a loss on sale 700. There's a loss on sale. P&L debit, investment credit. P&L debit, investment credit, and your P&L. Sorry, and your interest. Interest credit 50, debit 20. Net year end pay, it will go to P&L. Now normally it goes to P&L at year end. So actually it should go on 31st March. Normally it goes to P&L at year end 31st March. But our investment account is getting over. All investments are being sold. That's why they have written a date 1st March. Normally your interest income goes to P&L at year end. So better यहाँ पे date should be 31st March 03, but they are telling our investment account is getting closed now only, so we are transferring to P&L now only. So we have transferred on 1st of March. Alternatively, you can transfer interest to P&L on 31st March. Okay, done. This was your home assignment. Very simple. Moving ahead, we go to the next question, question number 3. Okay. We did 2 questions. Today we have to do 3. I told you slowly and gradually speed will come. Don't worry about speed. 2 questions done. Today we have to do 3, 3rd, 4th, 5th. Question number 3. Jaipur Investments Limited holds, you already have, 1,015% debentures of 100 each in Udaipur Industries Limited. Okay, the Jaipur Investment Limited, they hold 1,015% debentures in Udaipur Industries Limited as on 1st April 07. Okay, so as on 1st April 07, you are holding 1,015% debentures of 100 each at 1,05,000. Your cost is 1,05,000. Interest is payable June, December. Now pay attention. Interest is payable on June, December. Year ends in March. Your interest is payable in June, December. Year ends in March because we started on 1st April. The 1st April is our opening balance. Year ended in March. Interest is June, December. Okay. May 1st, 500 debentures are purchased, come interest. Total value is given. 1st November, 600 debentures sold, ex interest. 30th November, 400 debentures purchased, ex interest. 31st December 07, 400 debentures are sold, come interest. Prepare investment account up to 31st March, make it 8. Typing mistake. Up to 31st March 8 on average cost basis. On average cost basis. Fine. Now, there is one important concept which we need to learn. Let us first understand the concept and then I move ahead. Let us just understand the concept, then I move ahead. I can start giving heading as question 3, but we'll start off with a note. We'll start off with a note. We'll start with a note. Okay, now just pay attention. Whenever your year ending date and your interest date are not same. So whenever year ending date and interest date are not same. Year ends on 31st March, interest is paid June, December, are not same. I just write bracket में example. Year ends on 31st March and interest date is 30th June, 31st December. Okay, the interest is 30th June, 31st December, but year ends on 31st March. Then accounting will be done as follows. So whenever your year ending date and your interest date are not same, year ends in March but interest is June, December, year ends in March. So how do we do accounting? Accounting will be done as follows. Okay, number 1, Number one, at year end, we are required to pass entry for interest receivable. Now, sir, how does it come? Why do we have the entry for interest receivable? Pay attention. Pay attention. You don't have to write now what I'm writing. I'll rub this. Just pay attention. Your interest is paid June, December, again June, December, so on. The interest is paid June, December, so on. Now, in between your year-end incomes. Year ends on 31st March. Interest paid June, December, year ends in 31st March. Now, we have received interest till December. January, February, March comes in this year. But I'm not receiving interest now. I'll receive interest next year. Now see, we follow accrual concept. And as per AS 9, as per accounting standard 9, interest is to be recognized as income on time proportion basis. That much time over, you have interest receivable. Okay, so we have received interest till December, January, February, March. The interest is receivable. I have not received. But as it relates to this year, I have an interest receivable. So entry, sir, what do I do entry? Interest receivable is an asset. I'll receive in future. It will give me benefits in future. So interest receivable account debit. Don't write, just pay attention. I have to rub this. It is just for understanding. Interest receivable debit to, it's an income of this year, credit it. Say 3 rupees for 3 months. January, February, March. Interest relates to this period. I need to book the income in this period. On 31st March, I will pass an entry, interest receivable account debit to interest. So January, February, March, it relates to this year. That time is already gone. As per AS 9, interest should be on time proportion basis. That much time gone, you book a receivable. If I receive bank debit, not yet received, the interest receivable debit 3 to income, 3 rupees interest. Now, in June, when I receive 6 rupee, 3 rupee is out of the receivable of last year. So we generally do entry as bank debit 3, not 6. Bank debit 6. Just pay attention. June when I receive bank debit 6 2. Out of 6, 3 is related to last year. So I already have a receivable. That receivable goes away. So 6 I receive. I had a receivable. That receivable goes away. And 3 is income of current year. So now if you check, January, February, March comes in this year. April, May, June comes in next year. So if I just see, 3 rupee income is in this year. 3 rupee income is in next year. 31st March year will end. Interest will go to P&L. 3 rupee income is in this year. 3 rupee income is in next year. So we always do like this. So at year end, January, February, March, 3 months interest is accrued but not due. It's accrued. Time is gone. We follow accrual concept. Accrual concept means transactions are recorded as and when it occur. We don't wait till it is received. No. If I sell goods today, you will pay me after a month. I sell goods today, you will pay me after a month. Today, I'll book a sale. Debtors account debit, receivable. Debtors to sales. And when I receive, after a month, bank to debtors. we follow accrual concept. Same way, interest for January, February, March accrued. It will be due when? When they will pay you? June. But as we follow accrual concept, I need to pass entry for receivable. The 31st March, I'll pass entry. Interest receivable debit for 3 months. Assume 3 rupee. To interest account, 3 rupee. Now, next year in June, when I get 6, bank debit 6. Out of 6, 3 is the receivable of last year which is received. So that asset will go away. To interest receivable 3 and 3 will be the income of current year. So in simple words, 3 income goes in last year, 3 income goes in current year. This is correct. This is correct, but for this chapter, I will do entry in a different manner. For this chapter, I will do entry in a different manner. I'll not do like this. Pay attention, this all is not to be written. Or, what I'll do, year end, I'll pass entry for receivable. Year end, I'll pass entry for interest receivable. Interest receivable account debit 3 to interest account 3. Correct? I'll pass entry at year end for receivable. Sir, this is same. This is same. Now second entry gets deferred. Second entry gets deferred on first day of next year. First day of next year, I'll reverse the above entry. So whatever receivable you booked, year ended in March, you got interest till December, January, February, March, you booked a receivable. Now that receivable is reversed on first day. So on 1st April, interest account debit to interest receivable. 1st April, interest account debit to interest receivable account, we reverse it. 3. And now when interest date comes, which is the interest date? Which is the interest date? Sir, June. When interest date comes, you receive 6, pass a normal entry. Pass a normal entry. Last year ka receivable is already reversed. Pass a normal entry, bank to interest. It is bank account debit to interest account 6 rupees. So you don't have to remember how much is last year's, how much is this year's. Just bank to interest 6. Bank to interest 6. It will give a same effect. First entry was anyway same. First entry was anyway same. We book a receivable at year end. At year end, we book a receivable. First day of next year, I reverse it. In June, whenever I get interest, I'll pass a normal entry, bank to interest. Okay, now just see. Both are giving same answer. How? Bank debit 6, bank debit 6. Bank debit 6, bank debit 6. Okay? First entry was anyways common. So I'm just seeing the second last 2 entries. Interest receivable credit 3. Interest receivable credit 3. Interest receivable credit 3. Bank debit 6, bank debit 6. Interest receivable credit 3, interest receivable credit 3. Now interest 3 credit. Interest is 3 credit. Now in our case, just check. It's 3 debit, 6 credit. 3 debit, 6 credit. What is the net coming? Again 3. So 3 credit. Here also it is 3 credit. So whether I pass this 1 entry or I pass this 2 entry, answer will remain same. Sir, what is the advantage of the second method? Can't I go by first method? In your first method, there will be problems if, imagine, you had a receivable booked on year end. You will say, now June, May, when I receive interest, okay, out of receiving, 3 rupee relates to last year. You are able to make up. But imagine, what if that investments are sold during that time? It will be very clumsy. It will be very clumsy, very difficult. The simple, if year ending date and interest payment date are not same. Year ends in March, interest you got till December. So year end pay you need to pass entry for interest receivable. January, February, March. January, February, March, you have an interest receivable, pass entry, interest receivable. It's an asset. You have not received it, you have to receive in future. Interest receivable debit to interest account. It's an income credited. First day of next year, reverse it. The first day of next year, whatever entry you passed, you reverse it. Earlier I passed interest receivable to interest. Now interest to interest receivable. And now when interest date comes on 30th June, just pass a normal entry bank to interest. Automatically 3 rupee interest income goes in last year check. In 31st March, this 3 rupee went. And 3 rupee interest income comes in current year. 3 debit, 6 credit, net is 3. 3 goes in last year, 3 goes in current year. Income of respective period goes in respective years. So we will not be following this approach. No, we will not be following that approach. We will pass entry for interest receivable. Next day I'll reverse it. Whenever interest date comes, just pass a normal entry bank to interest. No need to remember out of 6 how much is related to last year, current year. The year end, book interest receivable. First day of next year, reverse it. And when interest date comes, normal entry bank to interest. Okay, so I just rub all these things. This was just for your explanation. Just for explanation, I'd written it. Now we just move ahead. Okay, come back to your note. At year end, we are required to pass entry for interest receivable. What is the entry for interest receivable? Interest receivable account debit. Interest receivable account debit to interest account. I have to receive, it's my asset which will give me benefits in future. Interest is my income. Income is credited. Okay, now on first day of next year or at beginning of next year, comma, the above entry will be reversed. So you pass entry for outstanding interest, that is your interest receivable. Next day reverse it. First day of next year reverse it. Interest account debit. Earlier interest was credited, now debited to interest receivable account. Now reverse it means reverse it. Now don't try to apply your rules. It's simple. When you book it, okay, I have to receive, asset goes up, debit, and income it is for me, income is credited. First day of next year, above entry is reversed. And number 3, when interest date comes in next year, when June will come, comma, normal entry is passed. For receipt of interest. Now don't bifurcate how much is for last year, how much is for current year. Just pass a normal entry. Bank account debit to interest account. So first we basically have receivable, say 3 months. First day of next year I reverse it. Now when I receive interest, I pass a normal entry bank to interest. Why are we doing this? This is followed so that the interest for respective period goes in respective years. Okay, so I write over here the above steps. The above steps are followed so that interest of respective period respective period. January, February, March should come in this year. April, May, June should go in next year. Year ended in March. January, February, March should come in this year. April, May, June should go in next year. The interest of respective period goes in respective year. Interest of respective period goes in respective years. So first year we have just passed one entry, interest receivable to interest, and this interest will go to P&L. So first year में January, February, March goes. So January, February, March will come in this year. Now in next year, interest debit 3, credit 6. Debit 3, credit 6. So net 3 months, April, May, June goes in next year. So January, February, March comes in this year. April, May, June goes in next year. Okay, that's it. Again I repeat. Whenever your year ending date and interest date are not same, how to account? So at year end, we'll be required to pass entry for interest receivable. We have received till December, year ended in March. January, February, March, we have a receivable. Okay, first day of next year, that will be reversed. So when I booked the receivable, it was interest receivable to interest. Now on reversal, it is interest to interest receivable. On 30th June, that is on interest date in next year, normal entry is passed for interest received. Bank to interest. Above steps are followed so that interest of respective period goes in respective years. Okay, now let us go to the question. I prepare investment account. This was just a note for your understanding, not a part of solution. Note only for your understanding. Now, question number is 3. In the books of Jaipur Investments Limited. Okay, in the books of Jaipur Investments Limited. If someone is pending, you can just pause it and write it down. The best part about video lecture is you can pause it. If you feel speed is slow, you can watch it on 1.1x, 1.2x. You can increase the speed. If you speed is very fast, you can just slow it. 0.9x, 0.8x, कुछ भी कर सकते हो यार. So in the books of Jaipur Investments Limited, we have 15% debentures of Udaipur Industries Limited. 15% debentures we are having. So I write down investment in 15% debentures of, I write Udaipur Industries Limited, UIL. I don't have a space, so UIL. And your interest date. Interest date is 30th June, 31st December. 30th June, 31st December. Leave one line for debit credit. Date, particulars, nominal value, interest, cost. Again, date, particulars, nominal value, interest, cost. 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 Again, same 15 lines. Date, particulars, nominal value, interest cost. In the books of Jaipur Investments Limited, we have investment in 15% debentures of Udaipur Industries Limited account. Udaipur Industries Limited account. We are preparing this investment account. Okay, you already hold. You already hold means you have an opening balance. You already hold means you have an opening balance on 1407. To balance brought forward. To balance brought forward. 1000 debentures, face value 100. It's 1 lakh. Nominal value is 1 lakh. Nominal value 1 lakh, and your cost is 1,05,000. Your cost is 1,05,000. Nominal value 1 lakh, cost is 1,05,000. Now pay attention. We would have got interest. See, we are already having. We would have got interest lastly in December. Interest dates are June, December. So we are on 1st April. Before 1st April, when did we got? Sir, December. We got interest in December. Pay attention. We got interest in December. Now, your January, February, March. So Jan 07, February 07, March 07. The interest related to last year, we would have booked the outstanding in last year. We had this investments in last year. We got interest till December 06, January, February, March. Related to last year, income should be booked in last year. Outstanding entry would have been passed in last year. Outstanding entry would have been passed in last year. Now, on first day of this year, it needs to be reversed. Outstanding entry was done in last year. So in last year, we have received till December, January, February, March was outstanding. On 31st March, we would have passed entry for outstanding interest. And now, we have to reverse it. So last year, we would have passed entry interest receivable to interest. Now it will be your interest to interest receivable. The opening interest receivable. Opening interest receivable was how much? So we had a receivable basically January, February, March, which needs to be reversed. Entry. We had passed entry for last year outstanding ka. Now reverse. Interest to interest receivable. Now ICAI doesn't write it as interest debit to interest receivable. They take it in opening balance. Now actually it should not be taken in opening balance, but they take it in opening balance. They don't write the entry as interest account debit to interest receivable account. They don't write like this. Interest debit to interest receivable. They don't write like this. They take it in opening balance. I am also taking it in opening balance. So they take it in opening balance. I am also taking it in opening balance, just trying to follow what they are following. Okay, so now opening interest receivable. Just write down a note below it. Working note number 1. Interest receivable. On 1407. Okay, interest receivable on 1407 we have for 3 months. Which are the 3 months? January, February, March. On 1 lakh. It's 1 lakh multiplied by 15%. into 3 by 12. 1 lakh multiplied by 15% into 3 by 12, that is coming as 3750. It is 3750. And I write down a note. ICAI does not pass entry for reversing the interest receivable of last year. Whatever was interest receivable of last year, they don't pass entry, but they include it in opening balance. They include it in opening balance. Full stop. Answer will remain same. So whatever interest receivable was booked in last year, we have to reverse it. They don't pass a separate entry for it. They include it in opening balance. Answer will remain same. We are also following same. We are also following same. There's an interest receivable at beginning. ICI does not pass entry for reversing the interest receivable of last year, but they include it in opening balance. If I would have reversed it, interest debit to interest receivable, the interest debit, it will come same. Interest may, debit side may, I would have they put it in opening balance. They put it in opening balance. Okay, let us put it. This is 3750. This is 3750 and this is as per working note 1. 3750 as per working note 1. If I would have passed entry interest debit, why hota? I would have written to interest receivable. If I was doing it, I would have done like this. Opening balance may it will be nil and here it will be 2 interest receivable is 3750. So I would not put in opening balance, I'll put it like this separately. Answer will remain same. Okay, just do what ICI does. The better is I also put it in opening balance. Now see, 3 months interest is debited. June May when I get 6 months. June May when I get 6 months interest, I'll pass a normal entry bank to interest. So 3 months is debited, 6 months is credited. 3 months will come in this year. April, May, June. So 3 months is debited in June when I get 6 months. In June when I receive 6 months, it will be banked to interest 6 months. It will be banked to interest 6 months. So automatically 3 months debit, 6 months credit, net we get it for 3 months in this year. Okay, I hope you are clear. This was the most important point. Year ending date, interest date are not same. So whatever interest outstanding or receivable was booked in last year, that needs to be reversed. They don't put it as separate entry. They put it in opening balance. Okay, next. Now sum is normal. Now interest will come in June. Before June, 1st May I have a purchase. 1st May we are having purchase. Let's go to 1st May, working note number 2. Working note number 2. We have a purchase on 1st May 07. We have a purchase on 1st May 07. Check the type. Come interest. Check the type. It is come interest. So this is your total payment. It's already given. Total payment already given 53,500. Total payment is already given 53,500. Fine. Now these are 500 debentures. The nominal value is 50,000 minus accrued interest. minus your accrued interest. It is on 50,000 into 15%. Lastly, interest is paid in December. Check interest paid last. Don't see year ending. Interest was paid last in December. So we have January, February, March, April, 4 months into 4 by 12. So 50,000 into 15% into 4 by 12, 2500. And you're towards investment. You're towards investment. Yes, this is to be deducted. Is 51,000. Towards investment, 51,000. Let us put it. Whatever I pay for investment, investment account debit. Whatever I pay for accrued interest, interest account debit. And total is to bank. Let us put it. Date is 1507. To bank account. Working note number 2. Nominal value is 50,000. Towards interest is 2500 and cost is 51,000. Nominal value 50,000, towards interest 2500 and cost is 51,000. Done. Next, we have a sale on 1st November. We have a sale on 1st November. Before that, interest. Before that, we have an interest on 30th of June. Okay, 30th June 07, we receive interest by bank account. Normal entry is passed and interest will be on not 1 lakh. Not 1 lakh. Now we have 1,50,000. So 1,50,000 into 15% into 6 by 12. I have 1,50,000 into 15% into 6 by 12, 11250. Interest column. 11250. No need to bifurcate how much is related to last year, etc. See, यहाँ पे 3 months got debited. In this there is 6 months received. 3 months debited, 6 months received. Automatically net becomes 3 months in this year. So don't try to bifurcate. It's pretty simple. Whatever was receivable last year, we reverse it. ICAI doesn't show a separate entry. They include it in opening balance. Okay, next. This will come only when year ending date, interest dates were not same. We have a sale. Which date there is a sale? Sir, 1st November. Interest will come in December. Interest will come in December. Working note 3. Sale on 1st November 07. Check the type. X interest. As it is X interest, this is only towards investments. $57,300 already given, plus we will receive accrued interest. Okay, how to find accrued interest? Check when was the interest received last. June, July, August, September, October. This is 1st November, 4 months. Nominal value is 60,000. Okay, 60,000 into 15% into 4 by 12. 60,000 into 15% into 4 by 12 is 3,000. This is your total receipt, 6 0300. And whenever you sell, you also find out profit or loss on sale. Whenever you are selling, you also find out profit or loss on sale. Okay, profit or loss on sale. First, selling price, amount received towards debenture. Towards investment. How much you received towards investments are 57,300. You received towards investment 57,300 and your cost, which is as per average cost. Okay, how do I find the average cost? How do I find the average cost? Debit side of cost minus credit side of cost. In this question, after sale, again there is a purchase. We had something, we purchase, we sell, again we purchase. I can't use the normal method. I can't use normal method. Debit side of cost. Line by line, first of all, opening was 1,05,000 plus 51 minus credit side of cost nil divided by debit side nominal value is 1,00,000 plus 50 minus credit side nominal value 0 into nominal value sold 60,000 into nominal value sold 60,000. So this is 1,05,000 plus 51,000 into 6 divided by 15, 62,400. Your cost is coming 62,400. I put it over here, 62,400. There's a loss of rupees 5,100. There's a loss of rupees 5,100. Okay, let us put it. We have to put the sale as well as the loss. Okay, whatever I got for investment, you're credited to investment account, that is cost column. Whatever I got for interest, credited to interest column, total is to bank. And your loss is 5,100, P&L to investment. Okay, let us put it, we have sold. Let us put it, we have sold. Date is 1/11/07. By bank account, working note number is 3. Nominal value sold is 60,000. Towards interest is 3,000. And this is what we got for investment, 57,300. And there is a loss, P&L to investments. So by P&L, loss on sale. This is also working note number 3. Loss on sale, working note number 3. In your investment column, cost column, 5,100. P&L to investments. It's P&L to investments. Take it in cost column, don't take it in interest column. 1/11 is done. Now 30th/11. 30th/11 we have a purchase. 30th/11 we have a purchase. Interest will come on 31st December. Okay, so let us go for the next purchase. Working note number 4. It's purchase on 30th/11. '07. Check the type. X interest. As it is X interest, there's only towards investment. amount is directly given, 38,400, plus I have to pay accrued interest. Check the nominal value, 400 debenture, that's 40,000 into 15%. 400 debenture is 40,000 into 15%. Lastly, we got in June, July, August, September, October, November end. Okay, 5 months. So take the November also because it's November end. 40,000 into 15% into 5 by 12, 2500. And this is your total payment. $40900. Total payment is 40900. Okay, put your purchases. Put your purchases. Whatever I pay for investment, debit it in investment account, cost column. Whatever I pay for interest, debit it in interest account, interest column. This is 30th November 7. To bank account, working note number is 4. Nominal value purchased is 4,000. Interest is 2500 and this is 38,400. 38,400. Interest is 2500. That's a purchase. Now we have a sale. We have a sale on 31st December and there is an interest on 31st December. Sale on 31st December, interest on 31st December. What should I do first? There's a sale purchase as well as interest. We have written a note yesterday. There's a sale purchase as well as interest on same day. What to do first? First go for sale purchase, then go for interest. Okay, so let us go for sale. Working note number 5. There is a sale on 31st December 2007. Check the type. Come interest. Okay, come interest. So this is your total receipt. Already given. This is your total receipt, 55. Minus towards, okay, we have minus your accrued interest. Lastly, we got in June full 6 months. Check the nominal value, 400. Okay, it's 40,000 into 15% into 6 by 12. December 31st, I have a interest, I have a sale purchase, go for sale purchase, then interest only on remaining investment. Okay, 40,000 into 15% into 6 by 12, 3,000. So we get towards investment. Towards investment is 52,000. And now I need to find profit or loss. Now I need to find profit or loss on sale. Selling price is amount received towards investment. Amount received towards investment is 52,000 minus your cost is bracket, may I write average cost. How do I find average cost? Debit side of cost. Debit side of cost. It is 1,05,000 plus 51,000 plus 38,400. Debit side of cost. minus credit side of cost. Let me just go and check it. It is 1,05,000, 51, 38, 400 minus 57,300, 5100. 57,300, 5100. 57,300 minus 5100 divided by debit side nominal value. Okay, 1 lakh plus 50,000 plus 40,000 minus 60,000. Okay, debit side cost minus credit side cost divided by debit side nominal value minus credit side nominal value into nominal value of investment sold is 40,000. This is coming as, okay, so 1,05,000 plus 51,000 plus 38,400 minus 57,300 minus 5100. 150. This is coming as 40615. 40615 it is coming. I put it over here, 40615, and there is a profit. 11385. 11385, there is a profit. You can't do the sum normally. You can't have that, oh sir, first can I add all the purchases and do it? No, you can't do like that, because you had a opening plus you purchased, then out of it something gone, so uska remaining, and then you have again something coming. So you have, basically it becomes difficult. Simple. Debit side of cost minus credit side of cost divided by debit side nominal value minus credit side nominal value into nominal value of debentures or investments sold. Okay, let us put it. Sale, whatever I got for investment 52, what I got for interest 3. Okay, so let me put it over here. Date is 31st December 07 by bank account. Working note number is 5, I think. Yeah, working note number is 5. Nominal value goes is 40. Nominal value is 40. Fine. Towards your towards your interest, how much was towards your interest? Go down and check it. 3,000, and this is 52. In this 52 there is a profit. 11385. Take it to your P&L. 311207. Now someone asked me, sir, if we write to P&L, but sir, P&L account is prepared at year end. So it can be not P&L to profit on sale of investment account, and that profit on sale of investment will go to P&L at year end. And that's why I write in bracket profit on sale. There's actually profit on sale account which will go at year end to P&L. Working note number is 5. Amount in your investment column 11385. In your investment column 11385. Okay. Now we have an interest on 31st December. We have an interest on 31st December only on remaining investments. We have an interest on 31st December only on remaining investments. Check the remaining investment. Out of nominal value 1 lakh plus 50 plus 40, 190. How much you already sold? 60, 40. 1 lakh is sold. 1 lakh is sold. So now it's on 90,000. Okay, this will be 90,000 into 15% into 6 by 12. 6750. This is till December. This is till your December. 6750. Now January, February, March. January, February, March should come in this year. Year ends in March. January, February, March interest should come in this year. So we have to pass entry for interest receivable. We have to pass entry for interest receivable to interest. ICAI doesn't pass it, they include it in closing balance. They don't pass the entry for it, they include it in closing balance. Okay, just leave one line. 31st December nahi, 31st March. 31st March 08 by balance carried forward. I will have a reference of working note 6. Let me go to working note 6. I'll have a reference of working note number 6. Interest receivable on 31st March 08. It's on 90,000, 15% for 3 months. 90,000 into 15% into 3 by 12 is 3375. I write down a note. ICAI does not pass separate entry for interest receivable at year end, but includes the same in closing balance. They include the same in closing balance. Practically, we will pass that entry. Interest receivable to interest. Answer will remain same. Okay, but I'm just trying to follow what ICAI follows. So I'll include it in closing balance 3375. I'll include it in closing balance 3375 rather than putting interest receivable to interest. The interest account may by interest receivable. I don't write, I just write by balance carried forward may 3375. Okay, let us put it. That's it. Actually, sum is over. This will be 3375 over here. Now nominal value is 90,000 remaining, and they don't tell the year end market value. It is assumed to be higher. Just close it. $91385 and 91385 is the cost of your investment. The balancing figure shows the cost. Total, this is 190. This is 27375. This is 1,05,000 plus 51 plus 38,400 plus 11,385, 205,785. Okay, this is the total. and I have to take interest to P&L. I have to take the interest to P&L. Year end interest goes to P&L 31st March 08 to P&L account. What was the total this side? 27375 minus 27375 minus 3750 2500 2500 18625. That goes to P&L. Interest at year end goes to P&L. Nominal value total 190 27375, and this was this was 205785. 205785. Okay, done with the question. So they don't pass entry for interest receivable and reversal of interest receivable. They don't pass entry, they include it in opening closing balance. So they don't pass entry for interest receivable and reversal of interest receivable. They include it in opening closing balance. We have also done the same. The closing balance of your investment account 91385. 91385, this represents your cost of investment. Always balancing figure is the cost. So 91385 is your cost of investment. Done. This will appear in balance sheet. In your balance sheet, not 90. 90 will not appear. Your investment appear at your cost. So your balance sheet may 91385 will appear. 91385 will appear. Nominal value 90 is of no use. That's just for calculating interest. You will get interest on 90. But investment appear in your balance sheet at 91385. Okay, this is over. Let us write down few notes. Notes only for your reference. Write down few notes. Number 1. Year ends on 31st March, but interest is received on 30th June and 31st December. Full stop. So we have interest receivable at end of year and reversal of interest receivable at beginning of year. The beginning of year I have a reversal. They don't take a separate entry, they include in opening. Year end I have an interest receivable. They don't pass a separate entry, they include it in closing balance. Number 2. When purchase or sale of investment and interest. We've written this note, again we are writing, are on same date. Comma, we will first pass entry for, or we'll first account, purchase sale of investment and then account for interest. Okay, this sum is over. This sum is over. Question number 3 gone. 2 more to be done. 4 and 5. Question 3 gone. Question number 4 and 5. Coming to fourth question. Coming to fourth question. Coming to your fourth question. Okay, what is question number 4? Same question. Solve the above question using FIFO. Same question using FIFO. Okay, same question using FIFO. Pay attention. If I go to my solution, if I was solving the same question by FIFO, would my opening balance change? Would my opening balance change? No. Opening balance will remain as it is. Opening balance doesn't change. Pay attention. Opening balance will be same. I purchase. How much is towards investment? How much is towards accrued interest? That will be same. How much is towards investment? How much is towards accrued interest will be same. Okay, that doesn't change. I got interest on 30th June. That will be same. I sold. How much I got for accrued interest, how much I got for investment is same. Only thing changing is profit or loss on sale of investment. The only thing which will change, your only thing which will change is one is this. Your profit or loss on sale of investment, this figure will change. This figure will change. And there's one more. So one is this, that will change. And if I just go to opposite side, I had this. This will change. The profit or loss on sale of investment. How much is towards investment? How much is towards accrued interest? That will be same. Price, cum interest, ex interest is remaining same. FIFO or weighted average will change. Profit or loss on sale. And accordingly, your this balancing figure will change. 99385, that balancing figure will change. The working note 3, some change will come. Working note 5, some change will come. Working note 3, working note 5, some change will come. Interest fully will remain same. How much is towards? If FIFO is followed. If FIFO is followed, your amount paid towards investment is same. Amount paid for accrued interest is same. They all will remain same. Only profit or loss on sale of investment will change. Because the cost of investment sold, we found by basically your, which method? Weighted average. Now should be as per FIFO. Okay, let us do it. Let's go to the solution. Question number is 5. Not 5, 4. Question number 4. Okay, if above question was solved as per FIFO, then only profit or loss on sale of investment would change, and corresponding effect will come, or I just write correspondingly, the closing balance of investment account, closing balance of investments will change. So only your profit or loss on sale of investment would change, and correspondingly your closing balance will change. This is because now the cost of investments sold will be as per FIFO method. The cost of investment sold will be as per FIFO method. Okay, so I directly go to working note 3. I'm not solving again. I directly go to working note 3. Therefore, all working notes will remain same except we go to working note 3. Except in your working note 3, profit or loss, we have profit or loss on sale of investment. How much will be profit or loss on your sale of investment? Profit or loss on sale of investment, selling price is same. Amount received towards investment. Check your working note number 3. Your amount received towards investment 57,300 is same. Only this cost. Now this is as per FIFO. 60,000 is nominal value sold. Okay, the amount received towards investment, that will be same. 60,000 nominal value sold. Let's go up to the question. We have a opening nominal value 1 lakh. Opening nominal value 1 lakh, cost 1 lakh 5. We are selling 60,000. Out of opening it will be sold. FIFO. First in, first out. Out of opening it will be sold. Okay, so I just put it. 1 lakh has a cost. Your nominal value 1 lakh has a cost 1 lakh 5,000. Your 1 lakh is having a cost 1 lakh 5,000. Out of that 60,000 sold. Okay, so 60,000 into 1 lakh 5,000 divided by 1 lakh, 63,000. You will have 63,000. There is a loss coming 5700. Earlier loss was 5100. Earlier your loss was 5100. Now 5700. Working note 3. And similarly, your working note number 5. Profit or loss on sale of investment. Profit or loss on sale of investment. Selling price is amount received towards investment 52,000. Amount received towards investment 52. Nominal value sold is 40,000. Nominal value which you have sold is 40,000. Now pay attention. Nominal value which you have sold is 40,000. Now out of your opening 1 lakh, having a cost 1 lakh 5,000, 60,000 nominal value sold. Opening nominal value 1,60,000 nominal value sold. Now we have 40, we are selling 40. As we are selling 40, it's out of the opening balance only. It's out of the opening balance only. Opening balance may remaining is 40, we are selling it. So 1 lakh had a cost 1,05,000. It's out of 40 only it is sold. Out of opening only it is sold. Now suppose nominal value sold was 50,000. Suppose nominal value sold was 50. 40 will be out of the opening balance. 10 will be out of the next purchase. Yeah, 40 will be out of the opening balance, 10 will be out of next purchase if nominal value sold was 50. Okay, our question, nominal value sold is 40,000. Out of opening 1,60,000 was sold. We have a remaining 40. We are selling 40 only. So it's out of opening balance. So 1 lakh having a cost 1,05,000. This will come 40 into 1,05,000 divided by 1 lakh. Array, it's 40,000 into 1 lakh 5,000 divided by 1 lakh. It's 42,000. Your cost will come 42 and there will be a profit 10,000. Earlier it was 11,000 something. The profit will be 10,000. Profit will be 10,000. Everything else will remain same. Okay, let us prepare investment account again. Let us prepare the investment account again. Closing balance will change. Closing balance accordingly will change. In the books of Jaipur Investment Limited, we have investment in 15% debentures of Udaipur Industries Limited account. Your interest date (30th June, 31st December). Your interest date is 30th June, 31st December. I'm just writing format. This is for your homework. I'm just writing the format. You have to solve it in your homework. Kuch nahi karna, you have to just put the figures. All other figures are same. Profit loss change we already written. Closing balance will change. I'll tell you how much will be the closing balance. Date, particulars, nominal value, interest, cost. Date, particulars, nominal value, interest, cost. This is the credit side. Date, particulars, nominal value, interest, cost. Date, particulars, nominal value, interest, cost. 15 lines. Your closing balance will change. Okay, now your closing balance will be, okay, now whatever you had this opening, they are completely sold. 60,000 sold, then 40,000 sold. Opening is completely sold. So only the remaining 51 and 38,400, closing balance will be 89,400. Closing balance will be 89,400. This one is sold off. The closing balance is this purchase, this purchase. Closing balance is second purchase and third purchase, 51 and 38,400. It will be 89,400. If you want, you can just write it. If you find, answer will come same. Your answer will come same. If I just want, I can write down this. By 31st March 08, by balance carried forward, nominal value is 90,000. This is 3375. And this will be 89,400. This will be 89,400. Prepare it. You will get 89,400. Done. Come to the next question. Come to the next question. This was question number 5. Ho gaya. Sorry, 4. Now the fifth one. Now the fifth one. So whenever it was FIFO, everything will remain same. Only profit or loss on sale will change because the cost changes. Accordingly, closing balance will change. Question number 5. Question number 5. Mark it as important. Question number 5. Mark it as important. Okay, question 2 was important. This is question 5. 2 was important. This is 5th. The following information is presented by Mr. Z, a stockbroker, related to his holding in 9% CG bonds, central government bonds. You're having some 9% central government bonds. Opening balance 120, cost 118, nominal value of each unit 100. Okay, 1st March you purchased 200 units. 1st July you sold 500 units. Now they write the word out of the original holding. Okay, when they write out of original holding, they try to say out of opening. When they write out of original holding, they try to say it is out of opening. Means they are following FIFO. Means they are following FIFO. Even if they don't say FIFO, I understand it's out of original holding. Original holding, that is opening balance. Out of opening you are selling, means you are following FIFO. 110, we purchased 150 units. 111, we sold 300 units. And interest dates are 30th September, 31st March. Interest date 30th September, 31st March. Z closes the books in December. Okay, so year ends. Year ends in December. Interest is paid in September, March. Okay, September, March. Year ends in December. The year ended in December. We have got interest lastly in September. Year ended in December. We have got interest lastly in September, October, November, December. Interest is accrued. We have to pass entry for receivable. First day of next year, it will get reversed. Okay, show investment account in his book. Let us start with the last question. This is your question number 5. Question number 5. In the books of Mr. Z, investment in 9% CG bonds account, interest date 30th September, 31st March. investment in 9% central government bonds. Okay, format, this is your debit side, date, particulars, nominal value, interest, cost. Again date, particulars, nominal value, interest, cost. This is credit side. Fifteen lines. Date, particulars, nominal value, interest, cost. 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 Okay, we have a opening balance. Our year ends in December. Our year ends in December. So 1101 is the opening balance. 1101 is opening balance. To balance brought forward, nominal value 120. Nominal value 120. We have some interest receivable. We have interest receivable beginning. This is opening. We have investment in last year. This opening, we have investment in last year. Now last year we got interest till September. October, November, December was outstanding last year. Outstanding entry done in last year. Reversal comes in this year. Rather than having reversal, ICAI shows it as opening balance. Okay, so we have some interest receivable at beginning. Okay, working note number 1. Interest receivable on 1101. What is interest receivable on 1101? Interest is on nominal value 120 into 9% for 3 months. 120 into 9% into 3 by 12. 2700. I just write down a note again. ICAI does not pass separate entry for reversal of interest receivable. Reversal of interest receivable at beginning of year, but includes it in opening balance. They don't pass entry but includes it in opening balance. Answer will remain same. Answer will remain same. They include in opening balance. We also will include it in opening balance. Do what ICAI does. They are not totally wrong. They have their own logic. They put it in opening balance. We also will put it in opening balance. Sir, if I write it a separate entry, I don't put in opening balance, I write to interest receivable. Is it fine? Yes, it's fine. If you don't put in opening balance, you write to interest receivable. Is it fine? Yes. Okay, so let me put over here. 2700 is interest and your cost. Cost is 1,18,000. Cost is 1,18,000. And we have working note 1. Next, on 1st March we purchase. Interest will come on 31st March. Interest will come on 31st March. Now just see over here. 3 months interest is debited. On 31st March I'll get 6 months. 3 months debit, 31st March I'll get 6 months. Automatically 3 months debit, 6 months credit. Net 3 months will come in this year. January, February, March. It will happen automatically. Okay, 1st March there is a purchase. Date, working note number 2. Purchase on 1st March 2001. X interest 98. Bracket X interest. So this is towards investment. This is towards investment. 200 units into rupees 98. 19,600. 200 units into 98. 19,600 plus accrued interest. On nominal value 20,000 into 9% into 5 by 12. So how do you get 5? Lastly paid in September. October, November, December, January, February. This is 1st March. Okay, so this is 20,000 into 9% into 5 by 12. 750. This is your total payment. $20,350. 20,350. Put it. 20,350. Towards investment 19,600. Accrued interest is 750. Okay, this is your 1st March 01 to bank account. Working note 2. Nominal value is 20,000. Nominal value 20,000. 19,600 and this is 750. 750. 19,600. Done with purchase. Done with purchase. On 1/7 we have a sale. Before that, interest on 31st March. Interest on 31st March, and now we will get interest on 1,40,000 into 9% into 6 by 12. We'll get on 1,40,000. 120 plus 20 we purchased. 9% into 6 by 12. 6,300. 6,300. Just go in a sequence. 6,300. Next, 1/7. 1/7 we have a sale. Working note number 3. Sale on 1701 type is X interest. Okay, as it is X interest, this is towards investment. Check the number of units, 500 units at rupees 100. It's 500 units at rupees 100, 50,000 plus we will receive accrued interest. 50,000 into 9%, nominal value 3 by 12. Sir, how do we get 3 months? Lastly, we got it on 31st March, April, May, June. This is 1st July. Okay, so 50,000 into 9% into 3 by 12. 50,000 into 9% into 3 by 12, 1125. And this is your total receipt. $51,125. And we find profit or loss on sale. We sold, we have to find profit or loss on sale. Okay, first your selling price, amount received towards investment 50,000 minus your cost. We are using FIFO. Out of opening balance it is sold. Out of opening balance it is sold. Opening balance nominal value 120, cost 118. Nominal value 120, cost is 118. We are selling nominal value 50. Okay, the 118 into 50 divided by 120, 49167. 49167. And there is a profit 833. And there is a profit of rupees 833. It's a FIFO method followed. Out of opening balance they are sold. Okay, next. Okay, next we just put this towards investment. We got 50,000. Accrued interest is 1125. Okay, towards investment we got 50. This date is 1701. By bank account, working note 3. Nominal value sold is 50. This was 1125. And cost we are getting is 50. Cost we are getting is 50. And your profit 833. Profit 833. I need to remove it. Take it to P&L. I have to remove it. 833. I take it to P&L. Date is 1701 to P&L account. This is profit on sale, working note number 3, 833. Profit on sale, working note 3, 833. Okay, done. Okay, this point is done. We have a purchase on 110. Purchase on 110. Before that, interest. Okay, before that, interest on 30th September 1. 110 there is a purchase. Before that, interest on 30th September. Interest will be on 120 plus 20. Out of that we sold 50. Out of that we sold 50 on 90,000. 90,000 into 9% into 6 by 12. Remaining investment. One which we sold, we already got interest. We already got interest from the date, up to the date of sale from the purchaser. So when I am selling, I get accrued interest. I already got on that, only on remaining. 90,000 into 9% into 6 by 12. 90,000 into 9% into 6 by 12 is 4050. 4050. September. Okay. Now you can go for purchase. Now you can go for the purchase which is given. Next transaction, working note 4. Next transaction, working note 4. We have a purchase on, check the date, 110. Okay, accrued interest will be nil. 110. Check the type, come interest. Check the type, come interest. This is your total payment. $150 units at 98. 150 units multiplied by 98. 150 into 98 is 14,700. Minus accrued interest is nil. This is towards investments. $14,700. It's 150 multiplied by 98, 14,700. Put it in your table. Whatever you pay for investment, investment account debit, cost column. Whatever you pay for interest, interest account debit, your interest column. So 14,700 we put it. Date is 1/10/01 to bank account. Working note number is 4. Nominal value is 15,000. And interest is nil. Towards investment is 14,700. 14,700. Now we have a sale on 111. Now we have a sale on 111. Let us go for the sale. Working note 5. Okay, working note number 5. Sale on 11101. Check the type. X interest. So as it is X interest, this is towards investment. As it is X interest, this is towards investment. 300 units at 99. Okay, 300 units into rupees 99. 300 into 99 is 29,700. 300 into 99 is 29,700. Plus I will receive for accrued interest 30,000 into 9%. Lastly, we got in September. Only 1 month gone, October. Lastly, we got it in September. 1 month gone, October. This is 1st November. We got it in September. The 1 month is gone. 225. 225. So total receipt total receipt 29925. That's the total receipt. We need to find profit or loss. Again, it's sold out of opening balance only. Again, it's sold out of opening balance. It's a FIFO. So selling price is amount received towards investment. Amount received towards investment 29,700. 29,700 minus cost, it is FIFO. Minus cost, it's FIFO. Nominal value cost, it's out of opening. Nominal value 120, cost is 118. Nominal value 120, cost is 118. We are selling nominal value 30,000. Earlier we had sold nominal value 50,000, now 30, still there is a balance. Okay, so 120 is this, so 30 into 1,18,000 divided by 120, 29,500. It is 29,500. The profit is 200. Your profit is 200. Okay, we put the sale 29,700 we got for investment, 225 is accrued interest. 29,700, 225. We are selling, investment account will be credited. We are selling, your investment account will be credited. 29,700 and 225. Okay, let us put it. Date 1/11/01 by bank account, working note number 5. Nominal value is 30,000. Nominal value 30,000. Interest is 225. This is 29,700. But in 29,700 there's a profit of 200. In your 29,700 there's a profit of 200. We need to take the profit to P&L. It has gone in investments. Remove from investment. Investment debit to P&L. It has gone in investment, remove from investment, we take it in P&L. 1/11/01 to P&L account. I write in bracket profit on sale, and as per working note number 5, you have to take it in investment, that's your cost column 200. You have to take it in investment, that's your cost column 200. That's it. Year will end in December. We have an interest receivable. Year will end in December. We have an interest receivable only on remaining. We have an interest receivable only on your remaining debentures. We have an interest receivable only on your remaining debentures out of 140. Out of 140, 50 and 30, 80 are sold. Okay, not 140. Out of 120, okay, this is 120, 20, 15. Okay, 120 plus 20 plus 15. Out of 155, 80 gone, 75 are there. So out of 120, 20, 140, 155, 50 and 30, 80 gone, 75 are there. Okay, next working note. This is working note 6. Interest receivable on 31st December 01. 75,000 into 9% into 3 by 12. We have received till September. October, November, December. 75,000 into 9% into 3 by 12. 1688. Okay, it's 1687.5. I'll take it 88. 75,000, 9%, 3 by 12. Note, ICAI does not pass separate entry for interest receivable. Separate entry for interest receivable at end of year, but includes the same in closing balance. Answer will remain same. So we are also including in closing balance. If you pass a separate entry, entry will be interest receivable to interest. So if you pass entry interest receivable to interest, answer will remain same. So either you credit in your interest account by interest receivable or you include in closing balance. 1688. Now I'll not write this note. Every time question has this point, note will not be written. We have written 2 times. Now we put it. Notes are only for understanding, not a part of your answer. Okay, so now on 31st December 01. 31st December 01, by balance carried forward, nominal value is 75,000. This is 1688. I'll come to this. Okay, actually we can find it from here only. 1,18,000 plus 19,600, 833, 14,700 plus 200. Minus 50,000 minus 29,700, 73633. Seven three 633. Check again. 1,18,000 plus 19,600, 833, 14,700 plus 200 minus 50,000, 29,700 is 73633. These are the balancing figures. 1688 is from your working note number 6. 1688 is from your working note number 6. And now your interest. Take it to P&L. Now your interest, take it to P&L. It's 13388 minus 2700 minus 750. 9938. 31st December 01 to P&L account. This is 9938. It goes to P&L. Always have a habit of circling balancing figure. You should know this is the balancing. Otherwise, you'll keep on searching how this figure came. Okay, to P&L account 9938. 9938 goes to P&L closing balance of your investment. Closing balance of investment which will appear in balance sheet. Interest gone to P&L 9938. And what will appear in your balance sheet is 73633. Investment appear at cost or market value, whichever is lower. Market value not given. Market value not given, assumed to be higher than cost. Market value not given at year end, it's assumed to be higher than cost. Investment will appear at cost 73633. Nominal value does not appear in balance sheet. In your balance sheet, it's cost or fair value, whichever is lower. Fair value not given, it will appear at cost 73633. Okay, done for the day. We are done for the day. Let's go to the home assignment. Pakka there will be homework question. 1 or 2 questions a day will be for your homework. Come to your home assignment question. We did question number 2. We have done question number 2. Your question 3 is for your homework. 2 is done. 3 is for your homework today. And 4 is for your homework today. 3 and 4 are for your homework. 3, 4 homework. 4th one important. 3 and 4 for your homework. 4th one important. 4th one is similar to the question which we did, plus it has a brokerage. 4th one is similar to the question which we did, plus it has a brokerage. So 3 and 4 are for your homework. 4th one important. 4th one is important as well. 3, 4 is for your homework. 4th one important. That's it. And a very simple sentence for you today. A lot of people are so much knowledgeable. They are seriously damn intelligent, but actually they don't get the benefits what they should get. You're damn intelligent, but you're not getting the posting what you should have got. You don't get the salary what you should have got. You don't get your results what you should have got. Why? There's a very simple saying, skill, knowledgeable, na? Skill without a will is nil. Skill without a will is nil. Your skill is of no use unless you have willingness to work hard. The skill without the willingness, that is will, to work hard is nil. So I just don't want your intelligence. I just don't want your intelligence. I want a dedication and hard work from you. Unless you're working hard, unless you're dedicated, rest assured you'll be thrown out. Seriously, you'll be thrown out. The skill without a will is nil. Okay, see you all tomorrow. Tata, bye-bye, take care.